for the last forever, I've never seen a Western news service say anything about gold that wasn't, yeah, but it's negative. So they'd say one thing that's positive, but yeah, but. Kind of like talking about gold and saying how China stopped buying gold for 2 months and, well, the price is going to fall. Now, first of all, that wasn't true. The export numbers out of the UK show that wasn't true, or the commercial banks. The way that the gold is shipped shows that they've been buying it. They haven't stopped. And I said that right away. But there's always something that they talk about in a story. Now, before I read this, Judy Shelton, if Trump were to win, she'd be the Fed chair, or she'd be who he would nominate. And she's a advocate of the gold standard. She's also talked about buying 30-year treasuries and linking them to gold so that they are redeemable in gold, so that people would actually buy longer duration treasuries. But of course, the gold price would have to be a whole lot higher. But let me read you something that just came out of Forbes. The article it says, it's hard to believe, but the world is beginning to lurch toward a gold-based monetary system. This despite the fact that the historical gold standard is held in almost universal contempt by economists and financial officials. Contrary to numerous myths based on ignorance, the system worked. The U.S. was on a gold-based system for 180 years until the early 1970s. We never had inflation when the dollar's value was tied to the yellow metal, and the U.S. experienced the greatest long-term economic growth in human history. The signs of change are here. One is that the central banks in recent years have been purchasing gold at record levels. Buyers include China, India, Russia, and a number of other nations such as Poland. These countries are reacting to growing doubts about the long-term value of the dollar, which in turn is a symptom of the perceived decline of the United States. And here's the part about Judy Shelton. And so India last year began experimenting with gold-based government bonds. Monetary expert Nathan Lewis, who co-authored our book, Inflation, What It Is, Why It's Bad, and How to Fix It, observes these would probably be very popular with investors worldwide. From the start of the floating currency era in 1971 to the present, a gold bond paying 4% would have outperformed every single stock and bond market worldwide.
Wow.
And so there's more, I'll skip it. But the bottom line is that, I think that it benefits the system, it benefits the governments, it benefits everyone, but it would create greater inflation. And I don't know exactly who, if anyone, would really, opposite of some sort of like Operation Sandman, where everyone dumps dollars and everyone in the world has had to stockpile dollars for 50 years. And if those dollars all hit our shores at the same time, along with the dumping of treasuries, interest rates would spike to triple digits. Well, maybe not that high, but high double digits. And in that event, because you can't have high double digit inflation without interest rates to compensate, or your currency dies. So at that level, stocks, bonds, real estate, the banks, and the insurance companies all vaporized, just like that. And there's your reset. And maybe that's what Klaus Schwab was talking about. I don't know. I think a gold revaluation would be a much gentler way of resetting the system and issuing a central bank digital currency tied to gold. And I find it interesting that both Trump and Harris have embraced cryptocurrency all of a sudden, which leads me to believe almost like they are listening to the Federal Reserve, who is hinting we will be transitioning to a central bank digital currency, some form of a cryptocurrency, whether it won't be open source and decentralized, but it will warm people up to a digital currency.
For as long as I can remember, the Western media has been notoriously negative when it comes to discussing gold. It's almost as if they've made it their mission to downplay its significance, to cast a shadow over any positive news with a hefty dose of skepticism. Even when they mention something favorable about gold, there's always a but, as if they can't let the truth stand alone without trying to undermine it. Take, for example, the recent claims that China stopped buying gold for 2 months, leading to predictions that gold prices would plummet. Not only was this narrative misleading, but it was also completely false. Export data from the UK showed that China never stopped buying gold. In fact, the commercial banks that facilitate gold shipments have consistently been moving large quantities of gold into China. Yet despite this, the media ran with the story that China had halted its gold purchases, causing unnecessary panic and confusion. Now let me tell you about Judy Shelton, a name you should know if you're interested in the future of the US financial system. If President Trump were to win again, Judy Shelton would likely be his pick for the Federal Reserve chair. She's a strong advocate of the gold standard and has even proposed the idea of issuing 30-year US treasuries that are redeemable in gold. Imagine that, a US Treasury bond backed by gold. But here's the catch. For that to work, the price of gold would have to be significantly higher than it is today. In a recent Forbes article, a rather surprising sentiment was expressed, one that you wouldn't expect from a mainstream financial publication. The article stated, "It's hard to believe, but the world is beginning to lurch toward a gold-based monetary system." This statement is monumental because it acknowledges what we've been seeing unfold for years. Central banks around the world, from China and India to Russia and Poland, have been buying gold at record levels. Why? Because they're losing faith in the long-term value of the US dollar, a symptom of the perceived decline of the United States itself. The article goes on to mention that India has begun experimenting with gold-backed government bonds. Nathan Lewis, a monetary expert, pointed out that a gold bond paying 4% would have outperformed every single stock and bond market worldwide since the start of the floating currency era in 1971. That's an incredible statement, and one that underscores the enduring value of gold as a store of wealth. The implications of this shift toward gold are profound. For one, it signals that central banks are preparing for a significant revaluation of gold. This could be a much gentler way to reset the global financial system, especially compared to more drastic scenarios like Operation Sandman, where nations collectively dump US dollars in treasuries, causing interest rates to spike and the financial system to implode. A controlled revaluation of gold could stabilize the system and pave the way for a new era of central bank digital currencies, CBDCs, backed by gold. It's fascinating to see how even political figures like Trump and Harris have recently embraced cryptocurrencies, which suggests they may be warming up the public for the eventual rollout of a CBDC. This isn't mere speculation. Central banks have been hinting at this transition for years. And while the mainstream media remains largely silent on the subject, the writing is on the wall for anyone paying attention. What's happening right now is a slow but steady shedding of US treasuries by countries within the BRICS bloc. China, for example, once held nearly $3 trillion in US treasuries. Today, that number has dwindled to around $700 billion. This isn't just a coincidence. It's a calculated move by these nations to distance themselves from the US dollar and invest in real assets like gold. The BRICS countries are discussing the creation of a new gold-backed settlement currency, which would allow them to maintain their monetary autonomy while reducing their reliance on the US dollar. This isn't a common currency like the euro. It's a settlement currency designed to facilitate trade between BRICS nations. And it's not just the 10 current BRICS members that are interested. 59 more countries have formally applied to join. We're talking about a bloc that represents the majority of the world's population, GDP, and military power.
I'd first start by slowly selling treasuries and reinvesting them in commodities. Isn't that what's happening right now when you look at the BRICS countries? They're shedding treasuries at a massive rate. China at one point had close to $3 trillion, and now they're down to $700 billion. They're slowly exiting the treasuries. They're slowly exiting the US-based investments in that respect. And you're seeing a group of countries in the BRICS that are 59 countries more have formally applied. There's 10 there already. I mean, and now they're discussing, as we talked about before, the new unit gold-backed settlement currency, which is not a common currency for the BRICS. It's a common settlement currency where every country maintains their own autonomy, their own CBDC. You would do it once you had critical mass. Once you had enough countries to, I mean, as it is, just the countries in the BRICS right now have a more human population, GDP. They have 2 of the 3 largest nuclear arsenals and a much larger military presence on top of they produce and accumulate and refine almost all of the world's commodities. So you add 59 more countries onto this, and now you're talking 8 out of 10 people, a human population. You throw in the Belt Road Initiative and the Shanghai Cooperation Organization. Why do you think Iran has, or China and Russia have said they're going to back Iran in whatever happens, and they have the right to defend their own sovereignty, et cetera, et cetera? Well, Iran is part of the Shanghai Cooperation Organization. It's the largest regional military organization on the planet, military and financial. They're in the BRICS. They have chosen sides. And so when you talk about massive amounts of human population, add another 59 countries or more, and add the Belt Road, the largest infrastructure project in human history that's already 75% of human population, 50% of global GDP. The US isn't on it, nor any of the Western countries. So you put all of these entities together in terms of commodities, military, population, GDP, everything. And I would say it represents a very formidable foe. And that's when you do it. You don't do it until you don't pick a fight with the biggest bully in the schoolyard until you got the whole sixth grade standing behind you, so to speak. It's marching to a different tune, where in years past, when it would break these round numbers and then fall back, the Western banks would step on it and it would never come back. It would take forever to come back. Now it comes right back. That goes to show that on weakness, the money who is shedding treasuries to buy gold is stepping in and saying, thank you very much for being stupid and suppressing the paper price on the COMEX and on the LBMA by naked shorting it. And so the fact that it continues, I mean, you look at something like Bitcoin, and I'm not a Bitcoin hater. I'm not. I want people to understand that. I'm not. In fact, I own just over one Bitcoin, but I am not a Bitcoin hater. But I'm not a Bitcoin believer either, the way that a lot of people are. But Bitcoin, which is supposed to be digital gold, can fall by 30%. Gold's never done that in a day or two or three or four. I think the volatility of other assets are that sometimes people think are replacements to gold speak otherwise. And when you look at gold's strength, it just goes to show that the biggest money in the world, the central banks, who just came out that the first 2 quarters of this year were the most gold ever bought by central banks in the first 2 quarters of any year, surpassing last year, which was the highest ever. And so I guess what I'm simply saying is that this is being accumulated at a time when the American public has very little participation at all in physical gold or gold-related equities like mining shares, and yet the price keeps going higher. That speaks to, in my opinion, the tremendous desire by the central banks to accumulate it, because I believe it will be part of a new system.
The conversation around gold and silver is more relevant now than ever before, especially as we witness a monumental shift in global financial power. For decades, the US dollar has enjoyed its status as the world's reserve currency, primarily due to its link to the petrodollar system. But as the world starts to move away from the dollar, largely driven by the actions of the BRICS nations and other emerging economies, we are seeing a gradual but undeniable decline in the dollar's dominance. This shift is not just a theoretical possibility, it's happening right now, and it's reshaping the global financial landscape. Let's start by looking at what's happening with the BRICS nations. These countries, which include Brazil, Russia, India, China, and South Africa, have been steadily distancing themselves from the US dollar. They are doing this by reducing their holdings of US treasuries and increasing their reserves of gold. This is a strategic move, one that reflects a lack of confidence in the long-term stability of the dollar. China, for instance, has reduced its holdings of US treasuries from nearly $3 trillion to about $700 billion. This isn't a sudden decision, but a gradual and calculated shift. The Chinese government understands that the dollar's days as the world's reserve currency are numbered, and they are preparing for a future where the yuan, potentially backed by gold, could play a more significant role in global trade. The BRICS nations are also working on creating a new settlement currency that will be backed by gold. This isn't about creating a new global currency to replace the dollar. Rather, it's about creating a common currency for settling trade between BRICS nations and their partners. This currency would allow these countries to bypass the US dollar and trade directly with each other, reducing their exposure to the risks associated with holding large amounts of dollars. This new currency would be a game changer, especially when you consider the sheer size of the BRICS bloc. As mentioned earlier, 59 more countries have formally applied to join BRICS, which would bring the total number of countries in the bloc to nearly 70. These countries represent a significant portion of the world's population, GDP, and military power. They also produce, accumulate, and refine a large percentage of the world's commodities, making them a formidable force in the global economy. The creation of a gold-backed settlement currency by the BRICS nations would have far-reaching implications. It would undermine the dollar's status as the world's reserve currency and could lead to a significant revaluation of gold. Central banks around the world have been preparing for this by increasing their gold reserves. The first 2 quarters of this year saw record gold purchases by central banks, surpassing even last year's record levels. This is not a coincidence. It's a clear sign that central banks are positioning themselves for a future where gold plays a central role in the global financial system. But it's not just the BRICS nations that are moving towards gold. Even in the West, there are signs that the tide is turning. Judy Shelton, who could be President Trump's pick for Federal Reserve Chair if he wins in 2024, is a strong advocate for the gold standard. She has proposed the idea of issuing U.S. treasuries that are redeemable in gold, which would be a radical shift from the current system. If implemented, this would require a significant revaluation of gold to make it feasible. The recent Forbes article that I mentioned earlier also reflects this changing sentiment. The article acknowledges that the world is beginning to lurch towards a gold-based monetary system, despite the fact that the gold standard is still held in contempt by many economists and financial officials. The article highlights that central banks have been purchasing gold at record levels in recent years, driven by growing doubts about the long-term value of the dollar. One of the most intriguing aspects of this shift is the role that central bank digital currencies, cbdcs, could play in the new financial system. Both Trump and Harris have recently shown an interest in cryptocurrencies, which could be a sign that they are preparing the public for the eventual rollout of a cbdc. A CBDC backed by gold would combine the best aspects of both worlds, providing the security and stability of gold with the convenience and efficiency of digital currency. This brings us to the concept of a gold revaluation. Revaluing gold could be a much gentler way to reset the global financial system compared to more drastic measures like Operation Sandman. This operation, as theorized, could involve a coordinated dumping of US dollars and treasuries by countries around the world, leading to a spike in interest rates and the potential collapse of the financial system. A controlled revaluation of gold, on the other hand, could stabilize the system and pave the way for a new era of sound money. The potential for a gold revaluation is supported by the actions of central banks around the world. They have been quietly accumulating gold while shedding US treasuries, signaling their lack of confidence in the long-term stability of the dollar. The fact that these purchases are happening at a time when the American public has very little participation in the gold market speaks volumes. It suggests that the biggest players in the financial system are preparing for a major shift, one that will see gold play a central role in the new economic order. As we look ahead, it's clear that the financial landscape is changing rapidly. The era of easy money and unlimited fiat currency is coming to an end, and in its place, we will see a system where real assets like gold and silver are the true measure of wealth. This is not just a possibility, it's a certainty. The actions of central banks, the growing interest in CBDCs, and the gradual decline of the US dollar all point to the same conclusion. Gold is the future. For those who are paying attention, the message is clear. Now is the time to start thinking about your financial future. Start accumulating gold and silver while prices are still relatively low. When the reset comes, and it will come, you'll be glad you did. Gold is not just an investment, it's a form of financial insurance. It's a way to protect your wealth from the inevitable devaluation of fiat currency and to ensure that you and your family are prepared for whatever the future may bring. In conclusion, the global shift towards gold is not just a trend, it's a fundamental change in the way the world views money. The days of fiat currency dominance are numbered, and as we move towards a new era of sound money, gold will be at the center of the new financial system. Whether you're an investor, a saver, or just someone looking to protect your wealth, now is the time to act. Don't wait until it's too late. Start accumulating gold and silver today and secure your financial future in an uncertain world.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.